you can understand Bitcoin as digital capital. It is the asset without the issuer. If it's digital capital, then it's going to grow to a $200 trillion plus network over time. And the value to the United States is anywhere from $3 trillion to $100 trillion if the US begins to acquire that network. As digital capital, it can negate or retire the national debt, or it can convert us from owing 40 trillion to owning 40 trillion of net assets. So it's a very powerful financial lever.
Saylor begins by discussing the concept of long-term value preservation. Throughout history, people have sought assets that could maintain purchasing power across generations. Traditionally, gold served as the ultimate store of value, demonetizing weaker commodities like silver, copper, and even unconventional forms of currency like glass beads and tobacco. This process, dictated by Gresham's law, ensures that the strongest money prevails. According to Saylor, Bitcoin is the natural successor to gold, as it possesses superior monetary properties such as scarcity, durability, portability, and security. He argues that all forms of capital ultimately flow toward the strongest store of value. As a digital commodity without an issuer, Bitcoin stands apart from other financial instruments.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If you already have money and you want to store your money for 100 years without worrying about risk, then you want to put it in a savings account. And so traditionally, the king commodity as a long-term money was gold. And what happens is gold demonetizes silver, and silver demonetizes copper, and copper demonetizes glass beads, and they all demonetize the giant stone coin of the Yap people, or bales of tobacco. And so Gresham's law says the strongest money wins. In the end, there can be just one. We're all going to go to the strongest form of money. So the strongest form of long-term money, which I'll call capital, is Bitcoin right now. And all these other assets are going to be traded in for Bitcoin. And there's no point creating a second or a third Bitcoin because there's only one network that's going to win. The rest are just going to collapse against it. But the real point here is you want a commodity to be a store of value, and it needs to be an asset without an issuer. And so if you look at all these asset classes, what you have is digital tokens, an asset with an issuer with very light regulatory touch. You can issue it overnight. A digital currency is an asset with an issuer, but it's just pegged to a nation state currency. A digital security is an asset with an issuer, but it's really tokenized stocks or bonds. So it's like BlackRock releasing tokenized Apple shares or BlackRock releasing tokenized S&P index. It would be a token that circulates on a crypto exchange at the speed of light 24/7 globally, but does have an issuer. And Bitcoin is special because it's an asset without an issuer. And why would you want an asset without an issuer? Because you're a company that doesn't want to trust any other company, or you're a country that doesn't want to trust any other country, or you're a saver that wants to store your money for 200 years, and you don't expect any company to last 200 years, and you don't expect any government to last 200 years. You just want your family to be rich forever. And so Bitcoin appeals to the people that want immortal capital. And you can see if you lay out this taxonomy, there's 4 quadrants. You need them all. You need short-term money in order to make payments. You need tokens to create capital. You need to tokenize securities, because otherwise, how do you innovate or create more efficiency in the world capital markets? And then you need a commodity to store and protect your capital. And once you see all four of them, you realize they should all be designated as new asset classes. The rule ought to be the issuers have an obligation to not lie, cheat, and steal. They're responsible for the damage they do. The exchanges should have the ability to trade these things at the speed of light with anybody or anything, any machine. And then they should have obligations. Don't lie, cheat, and steal. Don't assume a conflict of interest. And then the holders ought to have a right to self-custody. You ought to be able to own your assets, custody your assets, and transfer your assets freely. So I think that what we all agree with is there ought to be no AML, KYC frictions on asset transfer, because that destroys the utility of all these digital assets. And to the extent that you want to enforce consumer protections or investor protections, you should put the obligations on the issuers, and that way the economy starts to grow very, very rapidly. You can understand Bitcoin as digital capital. It is the asset without the issuer. If it's digital capital, then it's going to grow to a $200 trillion plus network over time. And the value to the United States is anywhere from $3 trillion to $100 trillion if the US begins to acquire that network. So, as digital capital, it can negate or retire the national debt, or it can convert us from owing 40 trillion to owning 40 trillion of net assets. So it's a very powerful financial lever. And the companies in the United States, like my company, they're capitalizing on Bitcoin. They're going to be worth 20 to 40 trillion dollars just on their Bitcoin assets if they continue to capitalize. So understood as digital capital, Bitcoin is enriching the corporations and the government itself, depending upon how much Bitcoin those entities own. That's the first metaphor.
This perspective highlights Bitcoin's potential as a foundational economic layer in the emerging digital economy. If the United States were to recognize Bitcoin as a strategic asset, it could generate trillions in annual economic activity by 2045. By treating Bitcoin as property, individuals and corporations can leverage it to create financial ecosystems that thrive without traditional banking intermediaries. Bitcoin, in contrast, offers a superior alternative to these asset classes. It provides scarcity akin to real estate, security surpassing bonds, and growth potential exceeding equities. As Bitcoin's adoption grows, it will continue absorbing value from these traditional investments, redefining how capital is stored and appreciated globally.
The second metaphor is Bitcoin is digital property. If you think of it as gold or cheese, nobody rents their cheese or mortgages their cheese. But when you think of it as owning 100 acres in Manhattan, if your family owned 100 acres of Manhattan 100 years ago and you owned it this year, and I asked you, what's your family doing with it? How are you going to pay your bills? You wouldn't say, well, we're going to sell our property in Manhattan. You would say, we're going to rent it, we're going to develop a building on it, or we're going to borrow against it, we're going to finance it. And so you would generate billions and billions of dollars off of 100 acres of real estate in Manhattan without ever selling it. It's property. And so Bitcoin as property means you will be able to rent it, finance it, or build businesses on top of it in the cyber economy. That would be worth $10 trillion to the United States in 2045 each year, right? We could generate $10 trillion off of the digital property that the United States buys in the strategic
to pay off
Bitcoin
the
reserve.
national debt?
Well, you wouldn't be a national debt. You would basically flip from being a net debtor to a net creditor, and you would generate yield. So that's a very powerful idea. Just like the company that owns $100 billion worth of real estate generates billions and billions of dollars of rental income a year. Or if I have $100 billion of capital, I can generate $5 billion a year just loaning the capital out. If you think about money, money decomposes into currency and capital. So if you live in Argentina and by law you're required to pay your tax bill in pesos, you're going to need ARS. You're going to need local currency. And if the currency is losing 20, 30, 40% of its value a year, then you would hold that for 4 weeks. Then if you needed money for the next 4 weeks to 4 years, call that midterm money, you'd probably want to buy the dollar. So you would have in your checking account USD. You wouldn't hold Bolivar, you wouldn't hold Naira, you wouldn't hold any of the really weak collapsing currencies. You wouldn't hold any Syrian or Afghan or Iraqi currency. So in that case, you always want to hold the US dollar. But if you need to hold the money from 4 years to 400 years, there is no institution or wealthy individual that would ever claim that the majority of their assets are held in dollars or pesos. They're holding capital assets. And those capital assets are split between 3 things. They're either holding bonds, you might be holding corporate bonds, you might be holding treasury bonds, or they're holding real estate. You're probably owning a building or property or a home or some other tangible physical asset. Or you're holding private equity. I own a company, or public equity. I have a portfolio of Magnificent Seven stocks or S&P index or something. So think about all the wealthiest people in the world: Elon Musk, Jeff Bezos, Mark Zuckerberg. What percentage of their wealth is US dollars? It's not even 1%, right? So Bitcoin doesn't compete with the dollar. Bitcoin competes with capital assets in the world, right? And there are $450 trillion of those capital assets. So think you own a Nigerian warehouse. You own 1,000 acres in Siberia. You own a private portfolio of Chinese stocks, right? You own a bar of gold, right? Why do you own these things? Because you had to put your money somewhere. So Bitcoin is replacing or competing with those things. If you look at the M2 money supply, I think the US dollar was showing as like 13, maybe 17% of that. And the primary competitors of the dollar are CNY, Euro, and JPY, Yen, Euro, and Chinese currency. So as the stable coin, as the digital currency backed by the dollar starts to circulate, that number is going to go from 17% to 30%, right? And what we're doing is we're really competing with other world currencies. And then the Bitcoin asset is less than 1%. And as it grows, if Bitcoin goes to $13 million a coin, then Bitcoin will go from 0.5% or 20, 30 basis points of the world's capital assets to 13% of the world's capital assets. It will still compete with real estate, equity, and bonds, but it will emerge as like a monetary index for long-term money. And so that's why it's important to understand this idea of digital commodity, because the use case of a digital commodity is not capital creation. That's why all the altcoiners, that's why they don't get, if you have zero money, you can't buy Bitcoin. So if you have zero money, but you're a podcaster, you need to issue a token to raise money. So capital creation is a use case of a token. The use case of a digital commodity is capital preservation and appreciation.
Saylor highlights the structural weaknesses in fiat currencies, particularly in nations with hyperinflation and unstable monetary policies. He predicts that Bitcoin's role as a long-term store of value will become increasingly pronounced as people seek to preserve their wealth across generations. With the rise of digital currencies, stablecoins, and tokenized securities, Bitcoin remains the bedrock of financial sovereignty. Its role in an increasingly digital economy is comparable to the foundational infrastructure of the Internet. As a decentralized, incorruptible asset, Bitcoin ensures financial freedom for individuals, corporations, and governments alike. Please like and subscribe.